Hey guys, what's up? What's up? How are you? How's your trading week? I hope you're good and I hope you had a fantastic trading week as we did. I'm just looking at the Aussie USD trade that we took this morning with my guys on the VIP group. The trade is now floating at plus 20 pips. I just sent them a notification to go break even on the trade. As you can see, it's kind of losing momentum. So we should be securing the bag as we're entering the Asian session. And I want to be up to monitor. I'll be sleeping. I want to be up to monitor the chart. So what happened when we took this trade is that it gave us 3 touches on this ascending trend line and bounced off this resistance zone, giving us a beautiful B2 setup. And we pulled the trigger. Now we're at break even, risk free, no stress. If you're new to the channel, my name is Laurent. You can call me Black. If it's your first time being here, we like talking about trades, building each other, supporting each other grow. So don't forget to hit that subscribe button and bell notification bell so that you'll be notified whenever we release content. In today's video, what we'll be talking about is multiple time frame analysis, the USD trade that we took, how we lost it, and the lesson learned. And we'll be looking at volatility 75 breakdown. So stay tuned, guys, because you don't want to miss any of that. So without further ado, let's take a look at a pair that perhaps I'd never use or I never trade to talk about multiple time frame analysis because I believe it's something that, it needs a pair to be broken down. Let's use this GBP PNL, I think. I've never used this. I've never traded this pair. Okay, nice. Looks like it's in a beautiful trend down from here. Okay, so we're going to start from the monthly time frame. Now, why do we start from the monthly time frame? Because with multiple time frame analysis, here's a beautiful way of explaining it. It's like we're looking at the bigger picture because with trading, the higher the time frame, the stronger the momentum or the stronger the direction in which you can actually see. Okay, so for instance, take an example. You want to see the whole city. You'll have to go on the higher floors of a building, I might say, right? So let's say you're in a building and you want to see like a major part of the city. You want to see a bigger picture. You'll have to go on the higher floors. That's how you'll see the bigger picture. So with trading, the higher time frames show you the bigger picture of the trend, of the direction, who's on actual control right now, and all that. So if you want to break down a pair, I'd advise you to start on the higher time frame so that you can have the bigger picture. That's the importance of the multiple time frame analysis. And everything, like for instance, the candlesticks, okay, let's say this candlestick here, let me highlight it. You see this bearish candlestick for the previous month, right? It represents all the tradings that happened within this month. So that means within this month, with this bearish candlestick that starts from here, let me mark it up so that you can actually understand, because I think most of the people don't really quite grasp this concept. So you see this candlestick from right here to right here, that's in this box. If you go into the weekly time frame, in the monthly, it's that one candlestick. But if you go into the weekly time frame, it's all of these candlesticks right here, all of this representation, right? All of this. So all of this is represented by that single candlestick. If you go into the daily, it's all of these. Let me zoom out. It's all of these. So let me start from the monthly again a bit because I think I messed up something. So this is the April candlestick. So if you go into the weekly, I highlighted some of the March candlestick. So if you go into the weekly, right? April, from April, right? So from here to around here, yeah. So this is the candlestick that was being represented by that candlestick, by the April candlestick. This is the representation in weeks, right? Let me remove this too. This is the representation. So that one candlestick swallowed whole all of this information. If you go into the daily, this is what it represented. This is what it showed, right? If you go into the 4 hour, This is the whole of the information that was represented by one candlestick from the monthly time frame. So the monthly time frame actually just shows you the bigger picture by removing all of this noise. So you can see, like, from the monthly time frame, right? This representation, this bearish candlestick, contains all of this information within it. All of these candlesticks, they were represented by one single monthly candlestick. So you can see that the higher the time frame, the less noise it shows, and it just shows you like the bigger picture of what's really going on in the market. Okay. So now, starting from the monthly time frame, it shows you the direction, if that makes sense, like the bigger picture. Okay. Okay. So now, starting from the monthly time frame, we have to look at the bigger picture, like what's the trend? What's the trend of this pair, right? We can actually see that the pair had created this high, right? And then it presented again this lower high. And right now it has created another lower high down here. So that means the market is in a downtrend. From the monthly perspective, we understand that the bears are in control. So that's the bigger picture. In our mind, in the back of our heads, while we're trading this pair, we have to know that, oh, this pair is in a downtrend. Now let's draw the market structures and see what they represent, right? So while drawing the market structures from the daily time frame or from the higher time frames like the monthly, you need to look at the recent prices and the market structure that's closest to them, because those are the ones that will be more significant. Okay. So, like for instance, here, the last turning point was around here, right? So now from there, you actually just pull back and see what happens. It has touched all the major pairs, all the major points that are important to this market structure. So that means prices were pushing high and then they reached this resistance, and right now they might be going low. Because if you look into the previous monthly candlestick, you can actually see it's a very strong bearish candlestick, right? So that's the bigger picture. Like from the monthly time frame, we know that prices are bearish. Okay, we may add on a Fibonacci candle, Fibonacci retracement key level here for more confluence, and voila, it's on the 0.618. So more confluence, right? Now we're going to the weekly time frame. Multiple time frame analysis is that once you already have that bigger picture, you need to keep on scaling down to the lower time frames to look if the lower time frames actually confluence with the bigger picture, and where you'll be able to get the perfect entries according to that bigger picture trend, right? Like right now we're in the bearish trend because we understand that this pair is going down. So you have to go into the lower time frames to look for bearish opportunities in the market. But if you get those bearish opportunities, where are you going to end up going, right? That's another thing. So you need to actually look for market structures on the lower time frames as well. So from the bearish structure here, you can actually see here we have this bearish support level here. So after bouncing from this strong monthly structure here, I believe prices will be having enough momentum to keep on pushing all the way down here. Because if you look at this bearish, very strong bearish structure here, the market then was trying to push up, but then was being rejected. As you can see, multiple candlesticks here, rejection. And this week's candlestick is a bearish engulfing 5 weeks worth of data within 1 week. So this is a very strong indication that prices will keep on pushing lower. And this actually resonates with the previous monthly candlestick that says the prices will be bearish. So this is another confirmation that prices are indeed bearish. So now we go back into the lower time frames like the daily, right? To look for more market structures or more market markups, right? So here we did have a market structure. We still have a market structure. Prices haven't yet broken here. So what I'll be expecting to see from this market structure here, right, is for prices to break below here, retest here, and then keep on pushing lower. That's how I'll be expecting this pair to play out. But then we have to go into the lower time frames again, such as this one. such as the 4 hour, to look for more market confirmation, or more market, how do you say this? More market directional biases. So that's the trend line. In the 4 hour, I'm going to plot the trend line. Okay. So it looks as if prices did break below this ascending trend, ascending channel pattern, retested it here a bit, right? And now prices have hit this this support level, and it's indicating a lack of momentum. It's indicating a lack of momentum, but anything can happen. So what I'll be expecting in this payout to play out is for prices, okay, for prices to perhaps come back, because here they're indicating a lack of momentum, so it may be hard for them to break this pair here. So what I'll be expecting to see in this particular pair is for prices to actually retrace a bit to around this zone here, right? To around this area here, before they actually look for more, or before they actually get more bearish momentum, more bearish structure. Because here you'll see that prices will indeed have retested this trend line, because this is a retest, but then it's very minor, like this retracement is very minor. So this will be a major retracement. So it will have retested this trend line, this zone, and it will be supporting this descending trend line. So there will be multiple confluences here to actually push down. This is one way it may play out. We can actually add on the Fibonacci retracement key level here and see how it plays out. Voila, it actually retraces to the 0.618. So this is one scenario that might play out in this particular pair. But I'll also be watching it. I won't actually be watching it, but just to explain that, once prices reach here, if you're going to be looking at this pair, I don't trade this pair, I was just trying to explain multiple time frame analysis. If you're looking at this pair here, right? Okay, yeah, we're talking about multiple time frame analysis, so we might as well go to the lower time frames. This is the 4 hour. Let's break it down to the 1 hour again. As you can see here, this is the 1 hour, right? In the 1 hour, we have this beautiful trend. Once prices reached this resistance, retested it, broke this market structure, and kept on pushing lower, right? So from this market structure here, you can actually see, voila, it's a 0.618 again retracement key level at this zone here, where I'm telling you, if you'll be watching this pair, you have to be careful with it. Right here is the 0.618. On the 1 hour, it actually shows a beautiful market structure. So these are like three multiple scenarios that might play out in this pair. And the lesson here that you should get is that while trading, you shouldn't be fixed on one perspective. You should be able to adjust to what the market is doing so that you can be in flowing with it. You can be resonating with it, if that makes sense. So you should be watching this market structure. If it's broken, then prices will retrace here and possibly bounce. But if again they break it, no doubt, no foul, no nothing played. That's what it is. We follow the market prices. We don't predict, we anticipate. So that's just a little bit to talk about multiple time frame analysis and how you can actually use the bigger picture to find entries on the lower time frames. Remember, we started with this from the monthly, and having that bigger picture in mind that this pair is bearish biased, it has helped us to come all the way down here and get all these multiple possible entry scenarios. So we'll be talking more about multiple time frame analysis in the coming videos. But now let's talk about USDcad and how we got it, how it played out, and all that. So this is USDcad. We took this trade this morning here after this candlestick formed, but then prices retraced and stopped us out. Oh well, that's trading. But let's talk about why we actually took this trade. So starting from the monthly structure, you can see that prices are right now in a very strong bearish, on a very strong bearish trend, in a very strong bearish trend, and prices hit this major support level that was last hit on 2017. That's like 4 years ago. So it's a very strong market support. It's a very strong market support area, right? And as you can see here, prices were very bearish, very, very bearish. That means that they didn't retrace any time. They didn't give us any retracement. So I expected once price reached here for a little bit retracement, because this trend is a very strong trend. I expected prices to retrace to the 0.38 because this is the retracement level for strong trends, of course. So let's look into how I got the entry, right? So looking at the weekly structure, you can see that last week prices closed with a doji here, indicating a lack of momentum. So that gave me a go ahead that the bears are exhausted and the bulls may be taking control anytime soon. Going into the daily structure, yesterday prices closed with the bullish, strong bullish engulfing candlestick, engulfing two candlesticks, and going almost halfway on the third candlestick. So that was a very strong bullish indication that, okay, prices are now bullish, okay? Onto the 4 hour, you can see that prices did break above this trend, right? And then once prices started pushing lower, we formed this hanging man candlestick, which is a reversal candlestick. And then once prices formed this bullish engulfing candlestick, I was like, okay, it's time to pull the trigger. The bulls are going in. But then prices rejected, and they didn't reject, they just reversed and stopped us out. Now, so we had every reason to take this trade. There's no doubt, or there's no anything to say that this was a bad trade. Never. No, this was a very good trade. This was a very good trade. And I'm still bullish biased, of course. So as you can see here, prices are now losing momentum. It's almost midnight. So it's 43 minutes to midnight right now. And the candle, you can see it's actually forming its doji. So we'll be looking for more entries on this trade tomorrow, right? Bullish trades, of course. Now, I'm still bearish biased in this particular pair, and I'll be bullish biased until this previous low is broken. Once this low is broken down here, then I will remove my bearish bias, because my bullish bias, because this previous low will have been broken and the market structure will have changed. The market will have created a new low. So I'll be bearish biased on this pair. But until then, I'm still bullish biased. And I'm sure we just lost this one trade. But tomorrow, once we get this entry, I'm going to send it to all my groups. And I'm sure that will be a winning trade. I'm sure of that. So that's all about Usdcad. And we did it on a multiple time frame analysis again, just to show you its importance, or the importance of multiple time frame analysis. Let's actually add on a Fibonacci in this particular pair here and see if it actually resonates with something. Okay, nice. So you can see prices on the 0.618 and they're losing momentum. So let's see what happens. We might get a nice trade from here, but it will be the Asian session. So I don't think if it will have that much momentum, we might get a nice entry during the London. So what happens, happens. Cool. So let's look into the volatility 75 real quick. So with volatility 75, I did send this markup like on the weekly breakdown on Sunday, that prices will be pushing low over here. But then prices never gave us a nice entry, right? Prices never gave us a nice entry to take the trade. So whatever happened. We didn't get a nice entry. That was that, right? So now prices are looking like they're trying to retrace some price range up here before they actually keep on getting bearish. So fastest way, let's just place a Fibonacci retracement key level because this is a very strong trend here. If this becomes the 0.38, I might actually think about taking this trade right. So these are the three major kill zones. And okay. Oh my God. Look at this. Its prices just hit the 0.38, closed with this bearish engulfing candlestick, and they look like they're pushing lower. So here's my bias right now. If prices keep on pushing lower here, let's not assume, let's look into the lower time frames, the 1 hour. Okay, this is the 1 hour. Again, you can see the importance of multiple time frame analysis. Okay, so prices still haven't broken the trend yet, but they're well on their way. So what I'll be expecting to see here, or what I'll be anticipating, is that if prices break below this, trend, I'll be expecting to see prices hit this zone here as the first profit. Okay, and then after that, I'll be expecting to see prices keep on pushing lower, because this is a very strong momentum. This is a very strong momentum. I'll be expecting to see prices keep on pushing lower. Okay, to around one here, and one does have a significant zone, as you can see here. One. So that's how I'll be expecting to see prices keep on playing or keep on pushing. If they break below this trend line here, that will be the first take profit, and this will be the second take profit. Let's see how it plays out. If it doesn't break that trend line and it manages to bounce off the trend line, what I'll be expecting to see again is prices keep on pushing higher, I think until this 0.618 here, right? Because that's a major resistance area, as you can see. And that's from that point there, from this point here, we'll be sniping a good entry and going with it all the way down here to the trenches. So that's all about Volatility 75. If this video has been of help to you, smash that like button, leave us a comment below on what you think or what you can improve on this, and don't forget to subscribe and hit that bell notification button so that you'll be notified whenever we release future content. Without further ado, I appreciate you for giving us your time. Peace and love.